Hey everyone, welcome back to Corporate Decoder, the place where we decode the complex world of corporate filings. And today we have a fascinating report from Woodward Incorporated where they are making a rather significant decision that will impact them financially. Let's dive in and see what this means. Woodward Incorporated is filing a current report on Form 8. And this filing is happening on the 12th of January 2026. What we are looking at today is a big strategic shift for Woodward, a decision that they have made regarding a particular part of their business. The core of this report is about the costs involved in shutting down or selling off parts of a company's business, and for Woodward Incorporated this means they have approved a plan to wind down thereon. Highway natural gas truck manufacturing operations in China, this part of their business, the China O business, has not been a consistent performer. And after trying to sell it and failing, they have decided to just shut it down. This is a move to really focus their industrial segment on areas where they see more potential for growth and better long-term results. They mention here that this China O business has not really made a significant difference to the company's overall money, making in a consistent way, and it looks like they expect to finish shutting it down by the end of their fiscal year in 2026. So this is a pretty big move happening over the next year. Now we get to the juicy part, the financial impact of this decision. They are expecting to take a hit on their finances with charges estimated to be somewhere between $20 million and $25 million. Before taxes, this is a considerable amount of money. These charges are broken down into a few categories. We are looking at around $3 million to $4 million for facility and asset-related costs, things like writing off equipment or property. Then there are employee-related costs, which could be between $5 million and $7 million likely for severance packages and other benefits for the employees affected by the shutdown. And finally, there are charges related to ending contracts, writing off inventory that they can't sell, and other costs associated with closing down this part of the business, which could be between $12 million and $14 million. Out of those total charges, they expect about $15 to $20 million of it will actually involve money leaving their bank accounts, meaning it will be a cash expense. Most of these charges and cash payments are expected to happen in the second and third quarters of their 2026 fiscal year, so this is definitely going to impact their reported earnings in the near term. This part of the filing is about disclosing information to everyone at the same time, which is what Regulation FD requires on the 15th of January 2026, which is just a few days after the board approved this decision. They issued a press release announcing this wind down plan. This press release is included as an exhibit with this report, and it basically shares the same information about the decision to close down the China O business. It is important to note that according to the filing, this information in this section is not considered officially filed for certain legal purposes, but it is being shared with the public. Like most corporate filings, this report includes what are called forward-looking statements. These are statements about what the company expects to happen in the future. For instance, they talk about their plans for winding down the China O business, the expected timeline for that, and the costs they anticipated. Is absolutely crucial to remember that these are just expectations and not guarantees. Actual results could be very different due to many potential risks and uncertainties, such as unexpected problems with the shutdown process or changes. In how much it actually costs, this is standard practice in these reports, but always good to keep in mind. This section simply lists the exhibits that are part of this filing. It includes the press release we just mentioned, and also an interactive data file that is important for electronic filings. And finally, the report is signed by William F. Lacey, who is the Executive Vice President and Chief Financial Officer, indicating the seriousness and official nature of this announcement. Now let's put on our Warren Buffett hats for a moment and look at the bigger picture. Woodward Incorporated is essentially shedding a part of its business that has not been performing well. This is a sign of a company that is willing to make tough JIC decisions to streamline its operations and focus on core strengths. While the estimated charges of $20 to $25 million might sound alarming, it is important to see them as an investment in future profitability. By removing a drag on the business, the fact that a significant portion of these charges will be cash expenditures means it will directly impact their cash flow in the short term. This could lead to lower profitability. Report in the upcoming quarters, which investors will be watching closely. However, by exiting the China O business, Woodward can redirect resources and management attention to areas with higher growth potential. This is a move towards greater efficiency and a clearer business strategy. The main risk here lies in the execution of this shutdown. If there are unforeseen delays or higher than expected costs, this could negatively impact their financial performance beyond the current estimates. Another opportunity is that by focusing on their priority end markets, Woodward might be able to achieve better growth and higher margins in those segments, which could offset the short Term charges in conclusion, Woodward's decision to wind down its China-O business is a strategic move to cut losses and refocus its efforts. It demonstrates a willingness to adapt and optimize its business portfolio, although there will be noticeable financial charges in the short term. This move is a step towards a potentially stronger and more focused future for the company. Alright, that is our breakdown of Woodward Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord linked in the description below. Thanks for watching. See you next time.